money is flowing out of emerging markets like China and India. Is this trend likely to continue? And has the global growth balance tilted clearly in favor of the US?
Well, it's important to highlight here that we're looking at the delta of growth, so rather the change of growth. Clearly, if you look at the Asian economies, they are growing at a far faster rate than the US, for example, or the case of Europe. In Asia, for example, we're anticipating growth of somewhere in the region of 6 to 7%, whereas in the US, we're looking at around 2%, 2.5%. So clearly, Asia is growing a lot quicker from the macro standpoint. In terms of the fund flows, yes, we are positive on the developed markets relative to the emerging markets, and we anticipate with tapering taking place, which is only likely in our view to take place Q1, if it is brought forward, possibly Q4. But on the back of that, that should hold the developed markets in good stead, whilst you will see continual fund flow out of the emerging markets. And it's important to highlight here that some of the Asian markets, particularly the ASEAN markets, have actually performed very well over the last 24 months. So there is room for profit taking here.
Chinese markets have been a clear underperformer. The economy as well seems to be losing steam. Do you see any indication of more liberal monetary support from the PBOC?
Hopefully they won't get much uglier than they are right now, but the issue is that we are very cautious on the China market. If you remember back last year, we had a similar sort of sell-off, and at that point in time we were actually a little bit more optimistic, expecting policymakers to come in and provide the level of liquidity that was required. This time around, the policymakers are actually making it very clear that they want to get the shadow banking system under control. And credit has also grown at extremely rapid rates over the last 24 months, not just in China, but also across Asia. So we are somewhat concerned at this point in time, and we do anticipate that, yes, whilst China will go through a U-shaped recovery, things are a little bit more dicey at this point in time, and we would rather have a neutral to slash underweighting in the Chinese market. And it's important to highlight here as well that we are underweight Asia, ex-Japan, and overweight the US. Those are relative bets that we have going at the moment.
The sell-off in emerging market currencies has also gotten the better of India's FIIs, while compounding the import bill for emerging market economies. Are we going to see further weaknesses in these currencies?
We think so. So we're actually very positive on the US dollar going forward. We have been positive on the dollar now for quite some months, and we think that going forward that will be the case as well. So we see the Asian economies and the Asian currencies, more importantly, being relatively weak against the USD. The one currency that we think will hold up relatively well is the Chinese renminbi, CNY, which we think will maintain its level at current levels. On the short term, we may see a bounce in the Aussie dollar as well, but longer term, we're also negative on the Aussie dollar.
Within the EM basket, which country would you bet on?
Within the EM basket, well, we don't look at EM, DM per se on the country level. What we would look at, though, here is more in terms of within Asia, which market. And we like India and we like Hong Kong. So if you want to call it an emerging market, we would like India within that framework. And we like Hong Kong because that has exposure to China.